Tech giants are posting powerful Q2 results with earnings across the sector jumping 18%, led by booming AI cloud services and chip innovation. While Alphabet and Broadcom soared thanks to AI-fueled ad revenue and semiconductors, Tesla slumped with falling deliveries, margin pressure and no clear path to profit from its AI dreams, cautioned the name of the game for H2, with major players warning of macroeconomic risks, rising capex and regulatory clouds ahead. For more, let's head to Miami. We're joined by Brad Gastworth from Unearthing Opportunities. Mixed results, you'd have to say.
Yeah, truthfully, the large mega cap outside of Tesla reported pretty strong results. I mean, it's really hard to find something negative on the Meta and the Google side. If you look at Tesla, clearly company is now on this downward spiral in terms of earnings. I mean, 2 quarters in a row of big disappointments. But I mean, the CapEx spend, this shouldn't be a big surprise. All these companies have alluded to it. The spending for the year has been off the charts, and it's going to continue to do so as each of these companies spends on AI.
What is driving the AI-fueled surge in tech earnings this quarter? Is it demand from consumers or demand from investors?
It's really on the enterprise side. I mean, the demand from the enterprise is really booming and really causing the infrastructure increase across the board. So, we're seeing the companies investing tremendously on artificial intelligence internally, and that in turn is helping out earnings. Now, you're going to see this shift down more to the consumer. Clearly, that's going to trickle down. But right now, it's the enterprise that's really leading the way for AI.
Talk to us about companies like Alphabet and Broadcom. Why are they outperforming their peers?
Yeah, I mean, on the Alphabet side, again, I mean, it was hard to find anything negative on YouTube. Significant growth, margins were better. You could really pick at the capex spend because it's astronomical, but they need to continue on the AI infrastructure. So really, I mean, they're benefiting across the board because of their AI, because of their other businesses. On the Broadcom side, they're a major chip supplier into many of these systems. So with AI and the infrastructure being built, you need these massive data centers that just need to and are consuming a lot more semiconductors. Broadcom is a leader within many different semis, and they're going to continue to benefit along with other semiconductor companies that aren't just AI specific semi companies.
Talk to us about Tesla. Let's go into that. So poor Q2 results, a sign of, I guess, a broader weakness in consumer tech. This isn't surprising given what we have been witnessing over the past 6 months. Is there any hope that things will get better for Tesla? I mean, they're investing billions of dollars into Samsung chips.
Yeah, I mean, I find it hard pressed to see this turn around anytime soon. I mean, one, you have sentiment down here in the United States quite negative for Tesla. I mean, it's a bifurcated market with people that now love or hate Musk because of his relationship or his prior relationship with the Trump administration. In terms of being cost competitive, they're definitely not that cheap compared to the offerings, and especially overseas, you're seeing a lot more EVs that are more reasonably priced than Teslas. Now, Tesla's been cutting prices, which has been one of the reasons why you've seen margins continue to downtick. So, I think Tesla is going to be between a rock and a hard place for several quarters. I think the real interesting part is the robotics. When will that really, kick off? And we're not, we're a year or 2 years away from that really adding. So I think from an EV perspective, we still need to avoid Tesla here.
How concerned should investors be about rising AI infrastructure costs? And do you think that'll be offset by, I guess, the job cuts that will be coming as a result of all of this AI investment?
Yeah, I mean, the infrastructure costs are going to continue. I mean, the big concern, and I think this is what a lot of people are watching, is on energy, right? You're having a lot of these mega cap companies securing ridiculous amounts of infrastructure around energy. And if it's hydrogen, if it's traditional, but you're seeing the infrastructure really being increased. So I think it's something we have to pay attention to for sure. I think it's quite important for the companies and for the overall environment. But I think if you look at the job replacement or displacement because of AI, I think those are somewhat unrelated. But I think the infrastructure we have to pay attention to. I think it's really the most important point right now.
Yeah, that energy infrastructure, as we say, that you got to have a lot more power to power all these data centers and AI chips as well. Brad Gastworth in Miami, appreciate your insights as always. Thank you.
Thank you, Aaron.